actually be on the website? Give me a second. Let me check. Let me check. I think it might actually be on the website right here. Indicators. And this tool, I just clocked something today, and to me, it's like I have been missing out. So, well, and okay, let me see if it's right here. It's here. Look at it right here. 3D oscillator. Okay.
Yeah, I've seen it before.
Yeah, but this is one thing. You know, I uploaded this strategy up last week, right?
Yeah.
And this week, I noticed that the 3D oscillator, that the main reason I had it for take profit is it's good at spotting the turning points of the market. So where there's going to be a turn, it spots it. And it doesn't work on the 5-minute time frame. It works from 15 minutes and above. But one thing is, when you mix it with the William, and when you even mix it with day trading, it's so beautiful that it's literally amazing. I wouldn't recommend using it by itself, but if you use it with the fundamental tools, you should be winning every time. So let me just point it out. So the first thing you have to notice is there has to be a spike, a major spike in the Williams. Either up or down doesn't really matter, right? Now, when there's a spike in the Williams, the next thing you want to see is your 3D oscillator crossing and giving you a buy signal, right? Now, when you see the spike and you see the oscillator giving you a buy signal, you can choose that as a signal. Let's say, for example, like, let's choose this down first. Oh, wait, let me just choose. Okay, all of this parts consolidating. Let's use here. Let me try to pick one place that it works and it doesn't work. Let's pick where it doesn't work first. So let's say, for example, this is a spike to the buy side. Now, with a spike to the buy side, you want to have a buy signal. When it's a buy signal, it's a green like this. Can you hear me? Oh, you're breaking up, bro. Okay.
Yeah, I can hear you. I can hear you.
So now when it's a buy signal like here, this gives a buy signal, a very high spike. Now this gives a sell signal, so you ignore that. At this point, you can choose to buy, but because, what's it called? It's been a while ago that it's given that buy signal. I wouldn't recommend buying, but let's say after the buy signal was given, because the buy hasn't done anything yet. So it gives you a buy right here, and you choose to go with a buy, and you can go in that trade and buy. You understand? In which case, if you are done in here, for example, oh, why did my computer just hang? Did my computer just freeze?
That's 30 pips.
Yes, my computer just froze.
Oh shit.
Yeah. Okay, let me
Is
go
it back?
back. Yeah, I think it's back now. I don't even know where I was because it just swinged me away. Ah, damn. It messed up my 3D signal stuff, 3D oscillator. Let me change the time frame and change it back to 15 minutes. It just messed up the oscillator stuff because it's quite heavy as well on the computer. So let's wait, let's be patient for that to load up. But basically what I noticed is that if we mix this tool, if we mix the tool together with, if we mix it together with
PZ. Hello?
Yeah, I can't hear you.
Can't hear you again, though.
Yeah, I can't hear you as well.
Thanks for that, man. I didn't notice the mic was off.
Hello? Hello?
Yeah, can you hear me now?
Yeah, perfect. It's working now.
Okay, yeah, perfect. So I don't know why it's telling me those system performances. I have the codes up. Let me just close the codes just in case. I don't know that's an issue. So if you had gone in from here, for example, and you use your fundamental tool, look at where it gave you the entry. It gave you an entry just around here. So if you had gone in, you're right somewhere around the top. So if you had done that, probably price came back here. But if you've taken your first profit around your 66 pips, but here 146 pips, it's a good tool. Now
For itself.
yeah, for itself. Now let's look
Yeah,
for.
but I don't get why the William is kind of showing up movement around that point.
No. You know, the William gives a dip, then he gives you that, once the dip is finished, it always moves back anyway. Williams will always move back to find the next opportunity. Now, the trick in this is you want to find extreme points. Now, you want to find points like this, points like this, points like this, and somewhere extreme. You don't want to look for a kind of like consolidation market somewhere like that. No, you want it to stretch. You want the William to be stretched out before you even look for an opportunity. So, for example, now let's say we want to pick. Let me go back a little bit. This is where I looked at earlier. So let's say you want to pick. I don't know. Let's just pick a random point. Let's say we want to pick here, for example, when the market stretched out, right? Now look at what happened right here. See, this gives a sell right here, and this gives a sell right here. The Williams is stretching down. But if you had gone in for a sell right here, you would have lost, right?
Yeah.
Now, the main reason I say we combine this, and the PZ is this. The PZ gives you your final confirmation. Now, you can only sell in this scenario if your 3D is still pointing to the sell section. The moment your 3D changes angle, you have to exit that market. So example is this. Now, in this scenario, this is pointing down right here, and this gives a down entry. You wouldn't take that trade until you see a sell from here, PZ. Now, when you see a sell from PZ, right, look, you only be able to profit about 36 pips. 36 pips, and look at around this point right here, this switches over. Now, when it switches over, this market is very choppy. You only benefit about 10 pips, saving you the stress of knowing where your stop loss is. But what we want to look for ideally is something that is stretched like this and then utilizing it. Now, I don't really want to use this small time frame right here. It's much better on a higher time frame like daily. Let me switch to daily chart. So now let's say, for example, here, see this dip, this massive dip on the daily chart. This gives you an entry right here. You can choose to go in right here at the top and benefit, let's say, up until this point right here. So even up until this point right here that I gave you the first buy signal to exit, if you're patient enough and if you have your seasonal chart and still telling you to hold, you can choose to exit at a further date. But even at this point right here, let me check. You should still benefit 668 pips. It's much better on a daily chart. Now, let's say, for example, here, I know here is not that stretch, but let's say your fundamental tool told you to buy and you're not sure exactly when. The William is already moving up. At this point right here, you could have chosen to go into the market exactly at this point, which is almost close to the end. And if you use your seasonal tool, you will have profited about 3,613 pips, depending on what day your seasonal told you to exit. But if you use the three-way system, you wait for this one and your William popping up plus your PZ, you'll have got him right here. It's a much second good position, but what would happen is you'll have profited slightly less. Now, I would choose the three systems together rather than the two. The reason being, the PZ gives you an extra level of filter. Now, let me go back to where we can see market peaking. So we saw market like dipped right here, for example. Now, at this point, you can see right here, you see that dip. So here, you might have want to go into the market right here. If you had gone into the market at this point, if you've gone to the market at this point, you're most likely going to lose because it's going to pull back against you more than 71 pips. So you wait for your PZ. When your PZ gives you the entry, that's when you go into it. And you already know your stop loss is going to be around here, which is 209 pips. Now, that's silly. That's silly to have a 200 and what's it called? 19 pip stop loss. Hold on a second. I just got a message on starts. To have that wide of a stop loss, in which that's why we use our fundamental tool to give us a date with this. But ultimately, the main reason I'm so excited about this tool is because it gives close to the edge where the market is going to turn. So here, yeah, hold on a second, guys. Apologies for this. People are having issues with the webinar. Let me just try to send the link. Apologies for this, guys. So yeah. So basically, what happens is we want to pick only the tip. I can hear myself. We want to pick the tip. So let's say, for example, here. Now, this gives a sell signal right here. Now, the sell signal has already occurred on the PZ. Or should we go for the buy first? Let's go for the buy first. So this is a buy signal right here from the PZ. And look, right here at this point, right here, it told us to buy. Now, that point is somewhere around here. You see? So if you bought right here, you're most likely going to profit from all this entire move right here, which is about 800 and something pips. The main reason I choose on a daily chart is much better on a daily chart than a lower time frame, but you can also use the same way with a smaller time frame, but it's just slightly more difficult. Now, you'll have profited about 824 pips, right? If you choose to use the three-way system, the 3D, the Williams, and the PZ, you'll have gotten somewhere around here, which gives you 671 pips, which I think that's a fair enough value. You know, obviously you wouldn't have exited at the top somewhere, you'll have exited somewhere in between. But if you use your, what's it called, your 3D, you'll have probably exited right here, which gives you ultimately 329 pips compared to 494 pips. Now, you can say, as Mukhtar said earlier, that, oh, but the PZ is already dipping. Now, the PZ already dipping means it's looking for a second opportunity for you. So you have to ignore the William, apologies. The William dipping means it's looking for another opportunity for you to sell. So you have to ignore it at this point. And just keep in mind that, oh, the market might turn anytime soon. So the moment I get a signal from my 3D that, oh, market is already at the tip and is looking to turn, I exit that trade, okay? That solves the issue of, oh, your William is already going back down. Now, let's say we took this trade. Now, automatically, we can see the market dipped with a significant amount as well while we're on the uptrend. So around here, right here, there's a second entry for the sell. Now, either you can go for your second entry for the sell around here, or you wait around here. Now, the market is definitely going to pull back, you know, do his own stuff right here. This is where all the technical stuff comes in, like a support and resistance, or we can use our fundamental tool to figure out the date. You understand? So if the market says, oh, the market is going to consolidate around this period of time, we're going to tend to ignore it and come back on the date that we think is going to be more beneficial to us. Now, I did a small analysis today on what's it called? CHF, I think. It was CHF that I did a small analysis on. And the market seems to be moving along the lines with the CHF. So let me pop to this. And I'm going to load up. I can't hear you. You're breaking up.
Before we continue, Sean, about this,
yes. You've muted yourself, Mukhtar. I could hear you for a second, then it's gone mute.
hello?
Yes, I can hear you now.
Okay, so
You're breaking up really badly.
question about the Williams.
Okay, yes.
Okay, I'll just.
No, say it.
It
It's kind
seems
of
like
like,
the way you.
yeah.
It's kind of different with the way the seasonal works in the sense that when it's at the top doesn't really mean that it's selling. Yeah.
No. So when it's
And the next.
when the William is at the top, it doesn't really mean it's a sell point. No. Basically, when the market is all stretched out to the top, that's where you want to look to start looking for your buy opportunities. That's how the William works.
But,
So
oh, it's more like inverse.
yeah. So for example, now look right here. When the Williams picked right here, you're looking for buy opportunities. When the William dips right here, you're looking for sell opportunities. You understand?
Okay,
So
perfect.
basically what we want to do, the way we use the William is this. We go on the seasonal chart. We look for, okay, let's say that, for example, market is about to reach its top right here. You know what I'm saying? On the 1st of May. So what we want to look for on the William would be a dip. So
okay.
let's go to the 1st of May, for example. What we want to look for, see right here now, market consolidated. But between that time, you see this dip in the William? Before the 1st of May, the dip, this small dip that happened here, this 2,231 points happened here. You understand? You know, that's what we're looking for. So it says dip, and look at what happened. Just like the seasonal predicted. You know, say on the 1st, it got to this peak right here, and this is it right here. So the peak was on the second peak is on the 4th, but the first peak is on the 1st, right? On the 1st, it got to its peak, and then the 4th was the second peak. So right here, you see that dip before the 1st. So at this point, right here, is the 1st. And guess what? On the 4th, which was the second peak, that's where it peaked the second time. And then boom, market fell. It fell 1,000 pips. You understand? So the William is basically going the direction which you're expecting the market to go. That's how it works. Compared to stochastic RSI, which do the inverse, you're looking for overbought, oversold value. No, we're not doing that with the William. We're just simply following the direction which the Williams is pointing to. Okay, and that's how we use the William. That's how we've been using it all the way through from every single webinar. So for example, now in this scenario, we're looking on the 14th is today. So by 16th right here, we're looking to buy just a little bit on the CHF from here to here, right? From here, 16th, we expect it to go up to about here.
Yo, what just happened?
I don't even know. It just dropped me out and put me back in. Okay. And so basically, we're looking to buy just a short-term buy. So in this scenario, for example, as you can see right here, let's say, okay, let's look at the, I'm going to go to the, oh, actually, I'm even comparing it to the wrong market. My bad. Guys, I've been comparing it to the wrong market. I need to be compared to the CHF market. I was comparing to Euro. So let me go to CHF. Yeah, it's kind of breaking in and out. Zoom. Yeah. So yeah. So basically, the CHF market now. Let's look at what we want to do. Let's see if I can go. don't know why it's happening like this, but, yeah, I'll give the analysis on USDC in a second. Can you yeah, I'll do that. Is it better now? Can you hear me better now?
Yeah, it's better now.
Okay, perfect. So what we're gonna do looking at actually, what I looked at this week was this asset. So CHF. Now with the CHF, right, we're looking for a strength around the 12 of 06. So for it to gain strength, and which means the USD is gonna fall from around the 12. No. Yeah. So wait, hold on a second. Unless I've done this wrong, my analysis wrong. Today is 14. Okay, 14 should be right here. So around here. Okay, hold on. So yeah. Apologies, I'm just trying to get my bearings right. So around the 1st of 06, right, the CHF is meant to tank. Now, if the CHF is going up, if we're looking at against USD CHF, then we're expecting the USD to fall, right? So around the 1st, right here, we expected the tank to happen. I mean, right here, we expect it to go up, and the 40 years kind of say it's going to consolidate a bit, but start going up from the 10th. So what happened was around the 1st, right here, market seems to consolidate a little bit, then dipped, which is perfect. On the 10th, which was expected dip, it did dip. And then if we follow the move from the dip, and then it goes up a little bit, and it should resume basically its up movement from around, ideally, from around the 12. Now, the 12 is on Friday. So now the up movement hasn't resumed yet. So the up movement hasn't resumed yet, but it's going to resume very soon. In which, when US CHF goes up, the USD CHF will come down. Let me see. So in this scenario, for example, around the 11th right here from the 15 years, and if we look at the 40 years as well, around the 11 right here, the CHF lost some small strength till around the 12. In which, if you look at it right here, the 11 right here till the 12th, CHF lost strength, which gives power to the USD. But I hope you guys are still keeping along with me right here. It's slightly confusing, but sometimes the money gets like that sometimes. So around the 13th, CHF should be resuming its strength, but ultimately the full power should come by 16th. So up until 18th right here. Let's see. Yeah, okay, perfect. So right from 14th to 16th up until 17, 18. So basically what we're expecting is this market to pull up a little bit and then dip a little bit further. Now, I'm banking on the fact that price is going to go even lower to around here. So price should pull up somewhere around here, about extra 68 pips, and then fall for about 251 pips, right? Now, if we look at the what's it called? The Williams is showing up, right? Which means it's expecting the price to go further up, which on Monday I expect, which is 15th, the 15th, price should go up a little bit, but the Williams should dip further because you can see it's curving already. So by Monday, I'm expecting to curve somewhere around here. And by that same Monday, what I would tend to do is shift my time frame to a lower time frame, like the 1 hour, and check the 3D oscillator and look for where it's going to be saying, you know, where the price is going to turn. And to back the claim up, we're going to go to the probabilities for a second and look at the USD CHF probability for June, which, if I'm not mistaken, that should be 10 trading days, 11. The 12th trading day, which is the 16th is where I'm looking to go into. So if we go to the 16th, so that's 12th trading day right here. It gives me a possibility of 50-50, but look at it, the 17th, which is the 13th trading day, is 62%, 65%. So these 3 days right here, I know I normally say let it be 3 days straight stretch, but I'm banking on this 50-50 going in on the wick of this 50-50. Now it's a risky trade. Market is more riskier nowadays, so I'm willing to take that risk with it. But now I'm gonna only take that risk with this new tool, which I have right here. Now let me point it out to you. See for example, right here, the William dipped, and we got the down signal from the 3D oscillator. I wouldn't go into this trade unless I get a PZ sign showing sell while the magenta line is still lower than the gray line. Once I get that signal, that's when I sell on this 1 hour time frame. So for example, now let's say for example right here when we go to that dip, I wouldn't sell obviously because the entry for the dip was actually, wait, right here it told me to sell, but I wouldn't sell until I get the signal, which this signal didn't even occur till later right here. Now to me right here it's too late, but if my what's it called, my seasonal and probability still tells me to sell, and I see this massive move to the downside, I would gladly take the trade and sell at the entry from the PZ. Now, let's say, for example, you didn't sell there and you want to look for more opportunities. That's why I like this 3D, because it gives you a lot more opportunities than the other strategy, this one right here. So in this scenario, price consolidated a little bit. You can still see there's still a drop in the Williams. It's showing loss of strength. Obviously, it's giving a buy right here, but because we're focusing just on the sell, we wouldn't have gone with the buy, which saved us from going into this trade right here. Because if you had gone into this trade right here, you would have lost. You understand? So in this scenario, this is still giving us sell, and this gave us a sell right here. Our next sell will be at this next point right here, confirming the sell. And this is still dipping down further, and this gives a sell right here. Automatically, you can go with this right now because you already have 2 positions in your sell. You can go with this third sell right here, or you can go after your PZ gives you the sell. Or right here, for example, it gave you a 4th sell right here, and with your PZ and everything, you could have gone for the 4th sell, which only gives you about 36 pips. But at this point, you should be locked in profit anyway. Once you're this deep in profit, I suggest by the time you're 20 pips in profit, lock yourself in profit. 10 to 20 pips maximum, lock yourself in. And that's why you have this second EA tool that does that for you. And to wrap it up, once price turned back up and you see this coming back up and you see this right here, you understand, if you think you've had enough, you can exit 162 pips. Or if you think price is still going to go further down, move all your stop loss behind right here. So that way you do not lose whatever you've accumulated from this point on. At every level anyway, at every level which you get a new entry right here, your stop loss should be moved behind the old one. And your stop loss should be moved behind the old one right here, and the stop loss should be moved behind the old one right here. So if all else fails and price moves down and move back up, this first one, your stop loss is already right here. You will probably go kicked out in profit. And because you want to let the other ones breathe, you get kicked out in more profit right here, about 126 pips from this first trade, 86 pips from the second trade, and 32 pips from this third trade. And probably if you had like 2 pips from the 4th one, all of that together should have given you over 200 pips profit. Now, what we're going to be doing is this. I know sometimes people are not patient enough to wait for the 1 hour time frame. I recommend it highly, but when on the 16th comes on the 16th at 12 o'clock on the 16th, and you want to sell the USD, yes, you can use trailing stops. I recommend using this sort of trailing stop. Okay, this is the one I'm working on right now. So there's on the EA, there's the trailing stop, which is called step keep distance. So which is like for every, let's say for every 50 pips, price you only move 25 pips in profit, which gives about 25 pips breathing space. Okay, that's what I would recommend in terms of trading stops. Yeah, 10, 20 pips trading stops, I wouldn't recommend it. You understand? Because you will choke the price. You understand? You don't want to have an opportunity like this, and then you end up noticing that you've choked the price. You understand? Like you moved, let's say your entry was right here, and price moved 46 pips in profit, and you've already moved, you know, your trailing stop to like 20 pips in profit right here. You like got kicked out, like right here, got rated, and price gone back in your direction. Then you start chasing it, you know. So to avoid such scenarios, you know, that's the best thing. So we can look at other opportunities such as here, for example, prices like Williams has already shown price is most likely going to turn. At this point right here, the 3D has given you a buy entry with a dot right here. Obviously, you cancel that out by giving you a sell and giving you a buy. But that's why, in order to avoid scenarios like this, that's why you wait for a PZ. And once your PZ gives you that entry, and the magento is above the gray line, you understand? Go for that buy. Boom. And you already know your stop loss is going to be somewhere behind it, right here, maybe right here, about 30 pips stop loss. And you can profit whatever you have here, 151 pips. If you minus this, about 128 pips. So risking 30 pips to collect 128 pips ain't bad at all. So personally, for me, I want to sell the USD CHF, and I want to sell that on Tuesday. Now, the only time I'm going to be selling that on Tuesday, and I'm going to be using this strategy this time around, because I've seen how it works in the back testing, and it looks very beautiful to me personally. It gives me slightly more confirmation on the edge. It's kind of similar to the USD CHF one. This one that we have, this one that I released last week for everyone to use, which use the EMA. But with the EMA, you can't really find the edge. With 3D, you can find somewhere around the edge, which is giving around the edge. Obviously, you still get some noise with it. But with the EMA, for example, look, if we're using the EMA strategy, for example, at this point, you will have missed the trade because you're waiting for price to go above right here before you take that trade, right? Let me put them side by side. Let me put them side by side. Yeah, this is the same trade. So this trade right here is the same right here. Now, with this strategy I showed to you last week, if you had gone in for the buyer, look, because of the consolidation meter right here, you wouldn't have gone in for this buy move, ultimately missing out that much of a trade. You probably would have got your buy signal, your first buy signal around here, which isn't bad at all. You know what I'm saying? It's safer, and your stop loss would be around here, about 15 pips stop loss. You'll have probably profited about 82 pips, you know what I'm saying, which is good. You got your first entry right there. Let's see if you got a second entry right here. It's good. And you got a third entry right here, which is also good. You understand? In which you'll be fine, totally fine. And let me change this to a lower time. We can't use this on the 5 minutes. Oh, this is 15 minutes. Let me go on the 15 minutes time frame. But this one, you know, ultimately in this one you got 1, 2, 3, 1, 2, 3 signal, and the fourth one right here is you risking it all. To be honest, I wouldn't have gone in anything at this point. I'll just be comfortable with my 3. But even if you had gone in at this point, you will still be able to accumulate 12 pips before price pulls against you. You understand? So in this one, you'll like go 1, 2, 3 entries, and if you want to go in for this one, 4th, but I won't rule that in, because if you looked at your supply and demand zone, you should have seen that there's a verified resistance right here. It says it right here at the top, verified resistance. Let me see if I can move it. Yeah, verified resistance. So I wouldn't be taking any trade at that point. You understand? So ultimately, that would have given you 1, 2, 3 entries. While in this one, for example, price has gone up and pulled to the top, and you've got that, and you got your entry right here. You like go 1, 2, 3, 4 entries. 4 entries before, you know, before you actually get to a scenario like, okay, price is going to hit resistance. Now, keep in mind, sometimes, like for example here, I just noticed now, my PZ gave buy entries right here, but didn't give the same buy right here. I don't know why that happens. Sometimes it happens, but the good thing is this 1, 2, 3, 4 signals were consistent. 1, 2, 3, 4 signals. So if you have 2 PZ loaded on the same screen and you see this signal right here, you don't see it right here, then avoid that signal at all costs anyway. Something new that I just noticed right now. So for me personally, this gives you a slight more edge to it. The 3D gives a slight more edge and gives you a more lower, you know, entry compared to the other formula that my current EA uses right here. but it's slightly riskier, just a little bit more risky. You understand? If you don't know what you're doing, but because everybody right here is slightly more advanced than before anyway. So I would recommend using a 3D and find a way to merge it up and mix it up with your current formula or the current way you trade, and use it to find entry. And I assure you 100%, right? You're gonna benefit from this, because I myself will be using it to trade this week. And I want to short the USD CHF this week, and I'm going to be using it to look for entries on Tuesday, and probably exit the trade by Wednesday or Thursday, and hopefully getting about 200 or something pips from that trade. Obviously, there's still more trades to be looked into, but that's the only one I've looked at today. So, and that's one of the ones that I'll be trading for this week. So, in that case, that literally summarized the webinar today. The 3D tool is on the website. If you want to download it, just go to the indicator section. It's right there for you to download. If you have the membership, just go to the indicator section and download it from there, and you can have that to use. And that literally summarized everything for this week, guys. That literally summarized this week webinar. Is there any question? And also,
it was pretty clear.
Did I confuse anybody? I feel like I might have confused somebody. I legitimately feel like that. Oh, Euro USD. Okay, Euro USD. You want me to check out Euro USD? All right. Let me go check out Euro USD. First things first. I'm gonna pop into probability. Let me check out that. I mean, we traded Euro USD last week. Did anyone use the strategy to trade Euro USD last week?
I didn't trade last week. So.
Oh, okay. Anyone traded last week? Oh, okay. Okay, cool. No worries. Euro USD last week was profitable. Got kicked out a little bit earlier before the trade, but it was still profitable. Euro USD, I'm just going to quickly pop into the stuff. So the 12th trading day.
And the same.
What am I looking at? Euro. No. Exams. You need to study for exams, right? So Euro USD, that's buy. Yeah. All right, wait. Let me restart this webinar. Let me just quickly stop this one and save the recording. I'll restart the webinar in a second. If you want to chill for the Euro USD analysis, just rejoin. If not, just you can leave. But thanks for attending, guys. All right, I'm gonna restart it right now.